Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author and TradingView with over 190k reputation points. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong historical support and demand area. From here, in fact, all these previous rejections to the downside were created. So every single time that the market tested this zone, it got rejected to the downside. And now the market just broke above the area. So all this previous resistance is now turned support here. The market has also already tested this previous resistance turned support, and it is rejecting it to the upside. And if we look closely, what we can also notice is that in testing and rejecting this support zone, the market was also at the same time testing a confluence of support area. Because from a pattern standpoint, since we have an impulse and correction, if we want to measure this correction after the impulse, we have to take our Fibonacci from the low to the high of the impulse leg. And this shows us how we have a 0.32 and 50% retracements that are currently lining up exactly at this area, which is also the previous resistance turn support, therefore creating that confluence of support. And since the market is testing and rejecting confluence of support, there is an increased probability that during this rejection to the upside, we have seen institutional longing. And we will be speaking about institutional longing in just a few minutes when we move to the commitment of traders. But that is because when you have multiple layers of support lining up in the same area of price, so a confluence area, there is an increased probability of getting institutional longing, which further increases the probabilities of a potential push higher. But for now, let's keep that in mind. And let's remember that the market still has very strong bullish momentum. And let's drop down the weekly time frame. Now, from a weekly standpoint, the situation is very clear. We have a market which is currently bounded in between these two levels and is currently moving in this weekly range. Now, until the market will remain in between these two levels, there's a good probability to continue to see horizontal price action being created in between these two levels. However, it is also important to keep in mind that the last test was of the bottom of the range. So the next logical step would be for the market to go for a test of the high of the range to see what kind of liquidity there is inside of the zone. And we can also notice how we have an intermediate level of structure around here, which we can identify, for example, with a different color, which is this previous weekly resistance from which this move to the downside was created, which now that the market has broken it to the upside and is currently retesting it here as support, is currently acting as support. So there is a good probability of seeing a potential push to the upside, testing the high of the range since the last test was at the bottom of this range. Now, if we drop down on the daily time frame, what do we see? Well, from a daily perspective, the situation is quite clear. We have a market which is currently completing this daily impulse correction, an impulse pattern to the upside. And I also spoke about gold just a few days ago when the market was around this area and explained all the reasons for which we could expect this potential push higher for the market to go and test the high of this range. And I will link in the description that previous analysis explaining all the reasons for which we could expect from here first the correction and then the continuation to the upside. So you can go and check it out for more free education. So now that the market has done and is doing exactly what we wanted to see, where is the next important structure? So In this case, the structure is here. This is the previous daily resistance from which both these rejections to the downside were created, which at the moment the market is facing as resistance. Until the market will remain below this resistance, it can easily continue lower. So what is the situation? Well, before we dig deeper into what we have here from a technical perspective, first, let's go and see what we have when it comes to the commitment of traders. So what hedge funds and the big players in the market are doing precisely on gold. Now, what we can see here is that with the last reports, net positions have been massively increased. We went from having 131.1k net positions all the way up to 241.5k net positions. So a massive increase of the net positioning, showing how institutions have been moving back to the bullish side for gold, therefore making it stronger. Because if institutions are moving to the bullish side, that is buying pressure for this market. And we can see how longs are currently sitting at 280.1k from an institutional standpoint compared to only 38.5k shorts. So clearly there is a big positioning to the bullish side compared to the bearish side from an institutional perspective on gold. So let's move back to the chart and see what we have. Well, from a daily perspective, in a situation like this, as we were saying, the market is below resistance, so it can easily continue lower. However, if the market will manage to break above this resistance, that is where things get interesting, because at that point, that previous resistance would become support. So if there is a break and retest of this previous resistance turn support, that is where there is good probability of getting more institutional longing, which at that point could further increase the probabilities of a potential rejection to the upside away from this level. So if there is a break and retest, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, at that point, I wouldn't be surprised to see a potential rejection to the upside, completing this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. From here, in fact, you will have the possibility to gain access to my entire courses. You will also have the possibility to gain access to one-on-one live private mentoring directly with me, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this video, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down the website past the testimonials, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible. The link is in the description and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, let me know in the comments below any pairs or topics that you would like me to cover in the next videos, and I will see you in my next breakdown.